this session on order flow trading today, and we're going to be delving deep into the basics of what an order flow chart is and why we need an order flow to trade in the markets we are trading today. So we are specifically derivative traders. We trade the options market, we trade the futures market, and we are short-term traders looking for opportunities to get into a good position on the buy side as well as sell side of the market. We are very different from that equity only class which relies only on the long of a market to go long. And granted, the market is generally over a period of time long side, and you get long side opportunities and you can win with a long side bias. But as derivative traders, what we do is we focus on opportunities both on the long side via long calls, long futures, and short side via short futures, buying puts, as well as we can make money into by into a market which is also going sideways. So all three options of the market can do only one of three things: go up, go down, or go sideways. And as derivative traders, we have to be alive to a possibility of trading the market in all possible ways, right? So we're going to be beginning the first of our order flow series, essentially to talk more about how order flow is going to help us in our trading, the kind of trading we do in the derivatives market today. Today's session is basically an introduction to how order flow works. We're going to begin with what exactly is an order flow, and I'm going to be talking to you about what these numbers on our screens are all about. What do you make out of these numbers which are there? And then we'll go into a deeper understanding about why we need these numbers, and how the most important part is how these numbers of an order flow chart can help us position ourselves better in the market, right? So the first and foremost thing which you would wonder when you're looking at an order flow chart is you're looking at this screen, and this is an order flow chart, a typical order flow chart, and you'll wonder, why are these numbers on this screen and what exactly is this all about? And I'm used to trading with a bar chart or a candlestick chart which does not have all this information. So why do I need this information? What exactly is there? And if you're the kind of trader who's looking at an order flow chart for the very first time, your first impression is, how do I make sense of all this which is there? Where is my bar? Where is my candle? And what do I do with all this information which is staring at me at a screen in front of you? And I got that impression when I first looked at an order flow chart. It looked very complex, and it's granted it looks very difficult for a person who's new to order flow to really understand what is going on, right? So it's very different from what you are used to and what you have been actually exposed to as a trader. It is very significantly different. So it requires a little bit of an application to understand what we are doing over here, right? Now the first question is, what is an order flow chart? And I like to leave you with only two words to describe an order flow chart. And if you can just understand these two words, you would get to know why we need an order flow chart, and you would also get to know how you need an order flow chart. So most of what I'm going to be talking to you about is already covered on our blog. I'll just bring this up and I'll talk to you about what this is. So if you go through what is order flow, just go through this link, WeTrender, what is order flow. We've spoken a lot about what we intend to do with order flow, and this is a good beginner's handbook to understand what an order flow chart is all about, the option process, the volume in the order flow and all. And through this 3-part series, I intend to walk you through a part which is going to give you a lot more understanding about what the order flow chart is, right? So if you are beginning, I highly recommend that you bookmark this particular link, WeTrender what is order flow, and go through it, and you will get to understand a bit more about what the order flow is all about. So to begin with, if I had to describe the order flow in 2 words, those 2 words would be demand and supply. Okay, demand, D for demand and S for supply, and we're going to be using these two words very often, okay, as we go through this session. So the fundamental thing about markets is that the markets run on these two words, demand is and supply. So when demand is higher, D is greater than S, demand is greater than supply, the markets probe up, which is what they've been doing, okay, all through the month of November and what we saw today also, right? And supply is greater than demand, the markets go down, as we saw in the month of October. That looks like a very distant memory. We were at about what, 16,800 before we've come to about 20,800. So really, okay, come a long way from where we were in October, right? So at that point of time in October, supply was overwhelming demand, supply was greater than demand. So the result of that was that the market was going down, right? And when demand is equal to supply, okay, then you can say, okay, that the market is going sideways. So these are the three basic maths, okay, which math which is there in the market at all time. Demand greater than supply, the market probes up. Supply greater than demand, market goes down. And when demand and supply are more or less matched and demand is equal to supply, you can say that the market is quiet or it is balancing, right? So as a trader, your opportunity is to look for situations in the market where the demand is greater than supply, and then you can be on the buy side of a market. You can be long biased, you can buy calls, you can buy futures, you can short puts, and you can make profits, okay, if that is a condition in the market you identified correctly. And if there is a condition in the market where you know, okay, that the sellers are more than the buyers, I can use these two words interchangeably. When I say sellers, I'm talking about supply. When I say buyers, I'm talking about demand. And when you see that supply is greater than demand, you can know, okay, that the market now wants to probe lower. And there is a third condition in the market when demand and supply is going to be more or less matched. That means the strength of buyers is equal to the strength of sellers. Then, okay, you can say that the market is flat. You can also say that the market is range bound. You can also say that the market is consolidating, or it is basically, okay, ranged. And these are different words which describe, okay, a similar situation, and that situation is demand is equal to supply, right? Now, how do you make sense of all this? How do you know, Shai, okay, that demand is greater than supply? And how do you know, okay, supply is greater than demand? Or how do you know demand is equal to supply, right? And the answer to that is this particular chart, okay, which you are looking at right now on your screens. The sets of numbers, when understood properly, will tell you when the demand is greater, will tell you when the supply is greater, and will tell you when demand and supply are almost equal or almost matched, right? So the first takeaway from on order flow chart is for you to make sense of these numbers and understand from these numbers where the demand side is heavier and where the supply side is heavier, right? So if I have to bring my cursor, give me a minute, let me just do this. And if I had to focus, okay, on any one particular aspect of this chart, and I'll talk to you, okay, about how to understand this chart in greater detail. But if you can break this chart, this one particular bar down, I'm looking at a 30-minute chart, and in this 30-minute chart, I got buyers and sellers on the left and right, and this is my 30-minute candle right over here, right? This is my candlestick, and this is my numbers or the orders within that candlestick. Now, this is essentially demand and supply. And if you can see the greens over here on the right side, you will always say that this green is equal to demand, and that is, okay, a market, okay, which has got buyers. And on the left of that demand is, you'll see some numbers in red, and that, okay, tells you, okay, that there is supply. So a basic thing, okay, we need to understand when we're looking at this particular chart, any one particular bar, there will be a candle on the left side, and there'll be two sets of columns. The one on the left is the column dominated by sellers, and the one on the right, where you'll find all those green fonts of numbers, is your demand. fairly simple. Just take this away and I'll walk you through, okay, what these numbers actually mean. But what we are doing is we are adding information to a candle. We are adding information to a bar. And what is this information? This information is more than what the open, high, low, and close of a candle is, right? So what we are doing is we are trying to find out within the high of the candle and the low of that candle, which was this, for this particular bar at 115, what really happened. Okay, so you can say, okay, that the high was about 2930 over here and the low was 2880. But what the order flow does, it gives you a transparent understanding of what really happened between the high and the low of the candle. Now there is a technique, okay, to read what actually happened, and it's not just about these numbers, okay, which are printed. We'll walk you, okay, through the technique required in a bit. But what I'm trying to explain over here or make us all understand is that there is added information now between the high and the low, and there is added information between the open of a bar and close of the bar. And if you understand an order flow chart, you will quickly find out why, okay, the open and the close behaved in the way they did this. Why was the close of the bar higher than the open, and why did this candle become green? Or why did this candle become red? Why was the red candle would be like, your close, okay, lower than the open, right? That is why, okay, the candle becomes red. But you will get an instant answer about why this particular candle is red in color. And it's got nothing to do with the open of the candle. It's got nothing to do with the close. It's got everything to do with the activity within the candle, right? So an order flow chart essentially gives you added information to what the market is doing between the high and the low, and what the market is doing between the open and the close. It presents to us a real-time understanding of the demand and supply which is happening across the chart and across the market. Now, what exactly, okay, is the inference, okay, to be drawn, okay, from here? So just think about this as a typical marketplace. The kind of marketplace, okay, where you once, okay, went, okay, maybe with your parents, okay, when I was a kid, I used to, okay, visit, okay, the markets, okay, with the marketplace, okay, with my parents, okay, and I recollect certain incidents where they used to buy vegetables, their groceries and all. Those were not the days of shopping malls where you just walk in, see the price and you dump it into your carting bag. Those were the days, okay, of the open marketplace, and I'm sure there are a lot more days like this, except, okay, that we do not do it, okay, that often. But just think about it as a possible marketplace, and you walked into that marketplace and say, okay, you wanted to buy fish, or you wanted to buy, okay, your set of vegetables, and you went, okay, and asked that vendor, kitne ka hai, how much is this for? And he told you 60 rupees, right? And you proceeded to tell him, nahi, 40 mein de do, 40 rupees mein de do. And there, okay, ensued a negotiation. He said 60, you said 40, then he said, okay, 55, you said 45, and then finally, okay, you wound the deal up at 50, right? And that is what we call a classic auction process. It's a negotiation. But then this particular incident, it was only you, but that vendor did it about, 100, 200, 300, 400 times, okay, in a day. And if that vendor had a product, okay, which was selling like a piece of vegetable, okay, which was, let's say, okay, with nobody else, he had a crowd with him. And if he had a crowd with him, there was no scope for negotiation, right? He would tell you 60 and you understood, okay, that the crowd is buying at 60. So you paid him 58, 60, or you paid him 60, and it was a done deal and it was done. So you got a sense of what was actually happening with regard to the marketplace at that point of time, right? A similar thing happens, okay, with the NSE. The NSE is right now based out of Bandra Kurla complex in Mumbai, and at the exchange, okay, is a lot of servers, and those servers, okay, collect information which we all feed, okay, into our terminals via our brokers. So you place an order, okay, to buy a call option, say about 20,900 today at about whatever price it was at 90 rupees. That order, okay, gets through your broker to the exchange. There is a matching done, okay, with a person, okay, who's a seller, and if it is a limit order, it gets, okay, matched, okay, when that limit order size of yours is met. Millions of transactions happening at the same time, but essentially an open marketplace where buyers and sellers are meeting each other and transactions are happening and trades are happening, right? And those trades which happen are represented by these numbers. So it's a very big market. The options market of India is about 50,000 crores of premium exchanged every day. 50,000 crores of premium exchange day. In fact, okay, last Thursday, when we had that settlement for November, it went up to 70,000 crores. It was around 69,500 crores odd. And that is premium. That is the premium, okay, which we are trading. Now, granted, okay, not all that premium, okay, goes to zero. But so suppose you buy something at 70 and then, okay, you close it at about 140. That difference, okay, is okay what reflects, okay, in that premium, and that's what we call the record of trade. But essentially, there's about 50,000 crores of that trading every single day, and those are represented by all these numbers which you see on the buy side as well as sell side of the screen, right? And if you can make sense of these numbers, and if you can find out, okay, where, okay, the demand side is rising, okay, let's say, okay, that there is this 272, there is this 334, and there is this 462, 350 over here, right? And if you can find out, okay, from here that there is more buyers happening, right? So 272, 324, 213, and there was a seller who was trying to push the market down, and suddenly he stopped, okay, and the market, okay, added more demand and took this up, right? And if you can find out, okay, from there, okay, how it is actually happening as a true process, you would get to know, okay, where, okay, in the chart demand is higher and where in the chart the supply is higher. Now, I'll walk you through exactly, okay, what you need to look at within the chart. But our purpose over here today is to find out, okay, what this chart can do, okay? And then when we know, okay, what it can do and how it can help us, we'll find out, okay, and there are tools which we will be talking about in our sessions about how we can exploit it to get maximum information from the market, right? But the foundation of order flow is just this. It's about your orders coming together at the exchange, okay, and presenting to you via a chart. So think about this chart as your exchange, and then at the exchange, everything is happening right now in front of you. So you're in a virtual world. You're actually, okay, not at BKC, the Bandra Kurla complex. You're actually, okay, sitting in front of the screen, and these are transactions as they would happen at a marketplace. And there are two aspects to it of these transactions, these orders over here. There are two aspects to it. One is what we all do. We place limit orders in the market. And the second aspect, okay, of all these trades are to understand what are market orders, right? Now, another thing, okay, you need to know over here is besides limit and market orders, in the hierarchy which is established, okay, in understanding an order flow chart, the market order is placed at a slightly higher level than the limit order, right? Now, I'm sure all of you understand, okay, what a limit order is. A limit order is simply an order which you put, okay, to buy an option, and you put a price. So suppose, okay, you wanted to buy, let's go, okay, with the Nifty future. Suppose, okay, you wanted to buy about Nifty future at this price today, 2844. Okay, and suppose, okay, this was you, this 111 buyer. Sorry, not the 111, 1111 buyer. Suppose this was you. Okay, you can do one of two things. Okay, you can put a order at 2844 in the system, and I know, okay, there are limits over here. You will not be able to put 1111 in one go, but okay, you put, okay, about 36 lots at a time, and or you use an order flow slicing software, and you put a limit order at 2844 for it to be executed at 2844 and not 843, 841, 842 or 850, exactly at 2844, and the market is somewhere lower, it will come and take your order, you get a fill. That's called a limit order. The other order is, you know, okay, that the market is trading somewhere over here, but you know something about this market, one of your indicators or some news, okay, you found out, and you get a sense, okay, that this market is going to rise from this 2815 to about 2949, and you want to be a part of it now. So what you do, at whatever price, okay, the market is trading there, whether it's trading at 840 or 830 or 825, you enter a market order. That means it has to be filled at whatever price the market is trading at. All right. And if you can do that, you enter a market order, you are part of the market immediately. Okay, your orders get filled if the market is sufficiently liquid, like the Nifty is, or many of the Nifty options are. In fact, okay, all of them are at the money and out of the money, and you get an immediate fill, and you get to be a participant in the trajectory of the market, in the movement of the market. You get an immediate position established, and you have a position built. Now, the thing over here to understand is the market order helps move price faster, right? Let me repeat that. The market order helps move price faster. Now, why do I say that? Okay, because the market order adds momentum to the existing demand and supply already there, and it helps move price further up away. And generally speaking, okay, when we talk in terms of market orders, we get to know, okay, that these traders who put markets are generally, and I'm saying generally speaking over here, are generally the kind of people who know what they are doing. They are not, okay, people randomly trading, and they are armed with a certain set of information which tells them that, okay, I want to get into this market now, and I want to get into this market quickly. And because of that, okay, we say that price moves faster when there is a market order. Now, in an order flow chart, you really do not need to get into the details of why it is a limit order or why it is a market order. But what we do is we try, okay, to put these numbers of market orders in greens over here to show you, okay, that at that point of time there was an urgency established to getting into a market, and this urgency of inputting a market order is what we are looking for. And you would see, okay, this urgency in most places, right? So suppose, okay, I talk you through suppose, okay, we paint a scenario over here. Suppose, okay, you're at a crowded place, okay, say a railway station or a bus station, okay, or even the airport, right? You're at a crowded place and everybody is moving in one direction in one way. Okay, suppose, okay, they are going to the gate. One person decides to urgently walk the opposite way. Okay, he's just in a bit of a hurry, and he's got his bags, baggage, luggage, whatever, and he's walking the other side. Okay, you would tend to think, okay, what is this guy doing? Why is he walking in such a big hurry in the opposite side? So what really attracts your attention in that entire flow of people is this guy, one guy, okay, he's taking an opposite thought. So you're wondering, okay, what is this guy knowing, and why is he walking into that other direction? So that is, okay, what attracts attention, and that is what the concept, okay, behind understanding market orders are. These guys have an extra bit of information with them, and tracking them makes a lot of sense for us, right? Now, to go deeper into our understanding of order flow, we have to understand that order flow actually is all about execution. It's all about execution, right? Now, hear me out over here. Why do I say that? Because execution is the key to all that we are doing in trading. Execution is the key to all that we are doing in trading. Now, I don't know about you, but I have been in a situation before. The number of times, okay, I've traded, and I've wondered, okay, should I go long over here, or should I stay out? Or should I buy a put over here, or should I just not do anything over here? So I've been into that situation. And if you've been into that situation, okay, with anything, okay, suppose, okay, we were doing this 20,000, or let's do a 20,700 CE. We were buying this all day today. After that dip, so suppose, okay, I was here, and this is a 3-minute chart, and this dipped to 164 around 2:40 to 3 p.m. today. And at 164, I was wondering, okay, should I get into the market or not? And then suddenly I see this big rush of orders over here. So at 164, I'm wondering, 164, 170, I'm wondering, okay, whether to get in or no. But at 175, I suddenly see this big rush of orders. Now, am I armed with more information, or am I not placed better to buy into the market? See, I've already made my decision to buy, but I was not convinced, okay, that I would be buying over here. But when I see more demand, when I see this big buyer coming in, now I know, okay, that I need to get into the long side of the market. So what it does, it helps us take execution anxiety away. And I'll repeat that word, execution anxiety away. And as traders, sometimes, okay, we do not know at all times whether we should be buying or whether we should be selling. And there's an anxiety about it. There is that little bit of a doubt, little bit of or a limiting belief, okay, that this may not be a good trade. But when you see in your charts, okay, that there is more demand, like I said in the beginning, demand greater than supply, you take that doubt away, and now, okay, you're participant in the long side of the market. Then you see further demand, and then you know, okay, that yes, okay, my trade is good, and suddenly, okay, your thinking and your thought process is being validated, and you see that option going up to about 200 rupees. Right? So if you understand, okay, this very, very clearly, okay, you would take out the element of doubt, okay, which is there in our trading thing. So that is, okay, what has really helped me as an order flow trader to get into situations, okay, where I can execute better. And I wanted to carry this thought with you. The entire purpose of looking at an order flow chart, and of course, okay, you have to understand it, and there is work involved, but the entire focus of looking at an order flow chart is to arm ourselves, or to place ourselves in a situation where we can execute better. The key word over here is execution, right? So the second big truth about an order flow, the first big truth is order flow is entirely about identifying demand and supply. The second big truth about order flow is to understand that it helps us in our execution abilities, right? Now, execution is the key to all that, okay, we are doing in trading. Everything is execution. If you cannot execute, you're out of the game, right? The entire process of trading is a number of years. I was in my schools, and I used to be, okay, on my school football team. And I've grown up, okay, in Bandra. And for those, okay, of you who are familiar, I used to go, okay, and play in St. Andrews. I used to play in Stanislaus. I used to play at the Khar Gymkhana also. And I was a 10-year-old. Okay, and we used to practice, okay, football, me and a lot of our friends, and the aim was, okay, to participate in the school functions. I used to play always, okay, in the forward line, and my coach, okay, used to watch me. And one fine day, he came up to me and he said, "Shai, okay, you're good, okay, but this is not working out, okay, you're good, okay, but you're not, okay, executing, you're not, okay, converting those goals." And he proceeded to tell me, "Next time, okay, you're in a match, don't come back from the field, okay, till you have scored at least 2 goals. At least shoot for 2 goals, but come back, okay, at least with 1 goal." Saying you're dribbling all the way over there, you're going to the goal post, but you're not hitting those goals. And I want you to score those goals. And this I heard from him as a 10-year-old, and it struck, and it stayed with me for my entire life. Okay, whatever I've been doing, I've understood, okay, that it's not the work, okay, which we do. It's about the output. It's about the result, okay, which has to come for the work, okay, we do. You can dribble, okay, but you need to score that goal, okay, and that's what it counts. And then there were days, okay, where I could not score, but I went back, okay, to understand, okay, where, okay, I could get better in my thing. Not that, okay, I started scoring every single game after that, but I know, okay, the matches, okay, where I did not score, I used to stay back, okay, and practice my game, okay, till I could, okay, get into a position, okay, where I could score, right? And you can carry that analogy, okay, to cricket also. It's the same thing, no? T20 game, last 6 balls, 1 over, 15, 16 runs required. These days, many batsmen, okay, do it. But the batsman who's there, okay, he's batting, and he knows, okay, his team requires him to do 16, and he's got about 6 balls to face. And he decides in his mind that I require only 4 good balls out of these 6, okay, to execute, right? And 4 good strokes will take him, okay, to those 15, 16 runs. Whether there is a 4, or you can hit, okay, 1 6, 3 4s, you have an option of not scoring for 2 balls, but mentally he decides that, okay, I have to score the 16 runs, and I require 4 good balls out of those 6 to do it. Okay, and you've seen, okay, people do it. Maxi, okay, has done it, okay, so many times, okay, in the past 1-2 months. And there are so many other cricketers, okay, our own Rinku, okay, is doing it, okay, so well. It's a mindset, and that mindset is about executing, okay, your plan, your process clearly. And if you're the kind of trader, okay, who thinks like that, okay, who's focused on execution, who's focused on deliverables, and who's focused, okay, on getting a performance out of your trading system, then this is the chart, okay, which is for you, because it's entirely about how well you're going to be executing, and it's going to be entirely about what information you're going to be taking from the chart, and how good you're going to be there in getting your entry at a perfect spot and getting an exit also at a proper spot, right? So the second most important thing is about execution, and execution, okay, is what, okay, we are going to be speaking about more as we go further into the program. So by now, I hope, okay, everyone is getting a fair idea about why we need to focus on an order flow chart. But essentially, an order flow chart is talking to you about what the demand and the supply is about showing you where the bids and the asks are, where, right? So suppose, okay, you go to your trading terminal, you open your trading terminal, and you're inputting an order. You think there is only one price in the market, but if you can press your F5 button or that order book, okay, you will see that there is there is actually a set of two prices, bid price and ask price, and there is a volume number which is right next to that thing. I'm sure, okay, a lot of you have seen that bid ask screen before. Previously, it used to be in the 5 rows. Now you can go up to about 20 rows, and you can see those bid and ask traded prices, and you can see the bid ask traded quantities also, right? So that is the actual truth of order flow, that there is not just one price in the market. There are always two prices in the market: the bid price and the ask price, the buyer's price and the seller's price, right? Now, the other thing, okay, which you need to understand, okay, about the order flow, and this particular chart, okay, which you're looking at on your screens right now, is we are not looking at the order book over here. We are not looking at the order book, that book, okay, which is about orders coming into the market. We are not looking at that. We are looking at actual traded quantities. We're looking at what? We're looking at actual traded quantities of traders in the market. Now, what is the difference between looking at order book and looking at the traded book, right? Now, the first thing, okay, we need to understand over here is, suppose, okay, you buy a call. Suppose you buy a call and say, okay, you're buying this 20,700 call at 173. After you buy, what are you doing? You're looking to book a profit and you're looking to sell the call, right? So you're looking for anything above 173 plus, let's say, okay, about 3 or 4 or 5 rupees, okay, would be your cost of brokerage, etc. Anything above 175 is making you a profit, and you're looking to sell into the market. So the fundamental truth of order flow analysis is this: after you buy, you are actually a seller, right? I'll repeat that. After you buy, you are actually a seller. You're looking to sell into the market. And suppose, okay, you are a buyer of a put, or you wrote an option and you initiated. After you do that, okay, you sold a call or this thing, you become a buyer, right? Just flip, okay, that understanding a bit, because, okay, this is, okay, what you are. But the other thing is, if the price goes with you and with your position, you're fine. But what happens, okay, when price, okay, goes against your initial plan, against your initial understanding of what the market would do? Now you're in panic, right? And when you're in panic, things happen. Things work differently for you. That's why, okay, we focus on traded quantities, because traded quantities tell us who is a player who's on the winning side and therefore will keep his position, and who is a player who's on the losing side and therefore he's in distress, or what we call upside down in our markets, and therefore he will close his position, fueling a further move into the market, right? Now, I just want you to elaborate over here a certain fundamental point. The order flow chart is not just based on pure buying and pure selling. Price does not move just because 100 people came and bought. price also moves because there is short covering, right? Price moves up when there is short covering. Price also moves when there is long liquidation. That means, okay, longs are booking profits in the market, price can come down. So it's not just about people buying and people selling, it's also about where the short covering is happening, which fuels the price up, and where the long liquidation is happening. So in the order flow, we are not just looking for people who are buyers and sellers, that is demand and supply. We are also looking for situations where traders are caught upside down. And not everybody on this chart is a winner. And not everything, okay, which is on the buy side is a new demand, right? It could be a short covering happening in the market. Just be alive to this possibility, and I'll be walking you through how to identify these situations. So there is a buyer, there is a person, okay, who's doing short covering, there is a seller, and there is a person, okay, who is doing long liquidation. I hope, okay, I'm not getting a little bit complex over here, but these are essential truths of the market, which a lot of people, okay, are not really aware about, right? And which you need to know as traders who are getting into the fast-paced world of the derivatives market, right? So there are a number of ways, okay, we can look at how we can grasp, okay, the information, okay, which is there in the order flow chart. So first and foremost, if you are new over here, I highly recommend that you go through our user manual, and you can see the user manual at the top right. On any of our charts, if you click on the extreme right over here, one of these, okay, will take you, okay, this particular one will take you through the user manual, and it will open up all these things for you. So if you're new over here, okay, you have to, okay, understand, okay, what this order flow is all about and how it moves, right? So walk you through this user manual, and in this user manual, you will get a fair sense of what is required to move the order flow chart. Now, I'll be honest with you. There is a lot of skill involved also in understanding an order flow chart. Okay, there is work involved, and it's not gonna be the same thing as watching the open, high, low, close of a bar and plotting, okay, a line and trying to understand the market that way. The order flow trader is a skilled trader, and he's put work on his trade, he's put work in his game, and his approach to market is that of a professional trader. Okay, so if some of you are here and thinking, okay, that there is an easy way of making money in the markets, no. Okay, this is a trader who knows his game. This is a trader who understands, okay, that there is a lot more tools, and he has to build his arsenal to get into the market, right? So I was giving you the example of a football game, and when we were getting coached, okay, in football, okay, my coach, okay, used to tell me, okay, don't just go, okay, for that one kick. Okay, be very good around the ball, okay, and know, okay, whether you can kick with your right leg, left leg. You can know, okay, how to head. You have to know, okay, how to take the ball on your chest. You have to move, okay, fast. Sometimes you have to dribble. You have to build all these skill sets. And the same thing, okay, they say, okay, to a person who's trying to understand cricket at the first time, or is going to play cricket at the first time. He's not a one-player game guy. You know, all these professional traders, they will not just swing the ball and, you know, just play, okay, one hook shot, or for that matter, okay, one cover drive. They can play an all-round game, and they worked on their game such that, okay, they can, okay, put that reverse sweep, they can, okay, put that long drive down the ground, they can hit that cover drive, they can sweep, they can, okay, use a short ball, okay, to hook or pull or do whatever. There are various elements, okay, to the understanding of their game, right? What we've done is that we've introduced 6 elements, okay, of an order flow chart for you, okay, to understand the depth of order flow. So it's not just about one thing. It's not just about one hook shot, right? It's not just about one reverse sweep. It's about you getting a 360-degree game. You getting good at playing whatever, okay, pitch the market gives you at. right? And to further understand your order flow, we've actually covered a lot of features, but there are 6 basic features which we will be going through in a subsequent video, and I want you to be with me and get good at it. So some of them, just to give you a brief, are understanding what a COT is, and the role of open interest in an order flow chart, understanding market liquidity. I've just covered this in a small 3 or 5 minute video. Understanding what volume clusters are, understanding imbalances, what they are, then understanding what an RB is, IB is, IS is, and RS is, right? And I believe, actually there are a lot more, but I believe that these 6 features, all of them constitute an order flow chart, not just one. So in my order flow chart, I am not really looking for only an IB and an IS. Granted, that's one thing which gives us a lot of efficiency when we are doing things, but I also understand things like a COT. I also understand things like an imbalance. I also understand things like a volume cluster, right? And I also understand things like what a market liquidity is. And later on, in a subsequent video, I'll be walking you through what to look for in all these charts. But if you come to an order flow chart and think that there is this is a one trick wonder, we call it a one trick pony. No, there is work involved over here, and you have to put in the efforts to understand all aspects of it, right? So this is a market which is floating up. There are no IBs, but it is still going up. So what was it which pulled the market up? This was this got buying at 1060. So you have to be good to identify that situation, right? And suppose that there is an IB, it makes things very clear to you. And then when the seller fails, you have to understand that he's failed. And then when there is a little bit of profit booking at the highs, you have to know that there is profit booking at the highs. If you are an all-round 360-degree player, you would understand all of this, right? So I wanted to actually put this initial talk of ours into understanding what the order flow is and how it is. But the subsequent program, which is going to come up on Friday, we are going to be delving deeper into other aspects of order flow and how to make sense of this information which is coming to our screen, right? So I hope all what we spoke about just now was a small talk to initiate you into the world of order flow. This is going to be a part of our series, and we'll record this series and post it for you. I want you to go through it and understand why you need to get into an order flow. And initially it may look a little bit difficult to get going into this, but once you go one layer down, once you are deep into this, this is a classic way of understanding all that the market is giving you, the information which the market is giving you, and getting good at monetizing this information from the market, right? So if you work with me and if you follow what we are doing out over here, you will get a very deep understanding, not just about executing trades for tomorrow. This is something which can remain with you for a lifetime, right? So just to recap what I've been speaking to you about, I spoke to you about order flow, and I told you it is demand and supply. And I also told you that when demand is higher, price goes up. When demand is equal to supply, price will be stable. When supply is higher, price will go down, right? The order flow helps us understand demand and supply. I also told you that the order flow is an execution tool. It helps you to execute better, and it removes that doubt which we have at the time of entering trades, as well as where to exit trades also. And the key over here is this one word called execution. If you're focused on it, you will get good results in trading, because trading is all about learning how to execute better. And finally, we spoke about the various features which constitute an order flow chart. And there are multiple things which come together in the making of an order flow chart. So one of them is COT, one of them is your open interest, one of them is your volume imbalances, one of them is your volume clusters. Then there are zeros or signs of liquidity, illiquidity in the market. And then finally there is responsive buying, initiative selling, responsive selling. We'll be going deep into each of these elements in the next part of our series, and I'll also walk you through how you can construct an order flow chart and go deeper into this aspect of the order flow. right? So with this today's session, I'll call it for a close over here. If you have any questions, okay, please feel free to shoot it to me over here. You can keep those questions incoming. Okay, you have our Twitter handle. You can speak to Uttam. Uttam is a very helpful person and who understands, okay, this depth of market profile and the order flow which we have. Okay, we'll speak to you, okay, about what our charts are doing and what these charts are doing, because okay, I work with these charts, so I understand these better. I know, okay, a lot of traders, okay, give me examples, okay, from other order flow charts also. All order flow is good, okay, but I can talk to you about what I know, right? I cannot talk to you about what is happening in another order flow chart. So we'll restrict our conversation, okay, to what is happening in the order flow charts which we have over here and which we are using and everyday trading, we as me as well as members of our community. And if we can keep those questions, okay, coming to what we are doing over here, okay, we'll take care of that long-term interest, okay, and that relationship is going to be there for a good period of time, right? So I'll wind this conversation over here, guys. There is going to be a recording of this placed on YouTube for you to go through, and hopefully, okay, we join up, okay, for that next session. The next session is on Friday, 5 p.m., and we'll go deeper into this concept of the order flow. The next session will cover the 6 aspects I spoke to you about: COT, OI, RB, RS, and finally, in the third session, I'll give you live examples about how we can bring all of this together and establish a trade for ourselves in the markets. So thank you for joining me today. I'll see you in the session on Friday, and we'll take a deeper look at the markets then. Thank you, guys.